News Radio 600 KOGO San Diego Business Weekend. Great to have you along. I'm Sully. Big show figured out today. Man, what a week we had. Christina Gustin with UBS Financial joins us today. Phil Molnar with the San Diego Union Tribune, as well as Laura Wolfstein from the Challenge Athletes Foundation. San Diego Business Weekend's on the air. So did you see this? I don't even know how to explain it other than crazy jobs report that came out on Friday. But boy, I'll tell you, the markets were very happy with what happened. The U.S. saw a hiring surge in November, adding 266,000 jobs. Unemployment rate falls again to match a 50-year low of 3.5%. Consumer sentiment improved quite a bit in December. Stocks added to their gains as more good economic news happened. And we started the week very dicey. We started the week down horribly, and it was based upon the trade deal. Actually, Monday's stocks were down based upon, in my opinion, profit-taking. But then Tuesday came around, and the trade deal, Donald Trump had said something in London with respect to, we don't need to get a trade deal in place until after the next election, and that roiled the markets a bit. And, of course, you had the impeachment proceedings that were happening, which the market largely ignored on Wednesday. And then Thursday, Dow Jones, NASDAQ, S&P. I mean, at one point, the Dow Jones was up 1.5%. Now, consider what that means. That is 400, very close to 400 points. So, and you know, when you're at 350, 400 points up on the Dow, I don't care if it is only 1%. That's still a big number. So, boy, we had a great week on Wall Street. And I will tell you, I, for one, am optimistic that, since the record highs we hit last week on all three indices could hit again. I mean, as equities unfold in December, stocks usually are doing pretty well in the last month of the year. It's one of the best months of the year anyway for stocks. The other piece of data that I want you to consider is the fact that our trade deficit narrowed to $47.2 billion. Now, what that means to us is, if you consider everything that's going on with the trade wars between the U.S. and China and all of the shots across the bow that Donald Trump has done, we're on track to record some good numbers there. Well, what's interesting is, if the trade deficit dropped 8% in October to a 16-month low, your first reaction is, well, this trade war and the way Donald Trump is handling this is working. We got lower imports from China. China's imports are down close to 23% this year. However, the U.S. is on track to record the biggest annual trade deficit in 11 years, despite President Trump's trade war with China. So that's an interesting piece of data. And what that will tell you, very simply stated, is that we were in a real hole trade-wise prior to this starting. And I don't think there's any way to sugarcoat it other than that, because even with the good news of the trade deficit working, we're struggling to find direction here with this trade war. So we'll see what happens. I'll be talking a little bit later today about T-Mobile jumping into the 5G bandwagon. The coffee market's fighting a war on a few different fronts at the moment, and you may want to be stocking up on coffee in 2020. I talked about that in the morning news with Ted and LaDonna this week. And then also this weekend, hands down, this Sunday is the best day of the year to buy Target store gift cards. So I'll tell you about that. You could save 10% this weekend on Target store gift cards, and I will talk to you. I'll talk to you about that in a bit. But first of all, I want to talk to my good friend Christina Gustin with UBS Financial and RKG Wealth Management. Smartest girl I know, smartest person I know. Forget about the smallest girl I know. Smartest person I know with respect to finance. Thanks for taking part of your weekend away there, kiddo. How are you?
Great. Thanks for having me. I appreciate it.
So what's the latest? Are your phones ringing this week? I bet your phones were ringing Monday. With cell signals from all of your clients, and then unless you have them trained well, but then by the time Wednesday, Thursday came around, your phone's quieted down, you could actually get some lunch, right? Is that how it works for you guys?
It's funny, there was a report published this week called Buckle Up But Stay the Course, and I think that embodies pretty well what happened. Like you said, there were a lot of headlines about China and a lot of gyrations in the market early in the week, but quite a rally on Friday after the jobs report came out. And I've told you before, I tend to be really skeptical of these kind of headline-driven moves in the market, but the thing that was different about Friday is that's a real fundamental measure of how our economy is doing. And a positive surprise like that, I think, is a really good indicator. You and I have been saying for months, we don't think things are as bad as people are worried that they are. And this was really, really positive news.
Yeah, the interesting part of this thing is if you look at the fundamental data, and I always love it when we're trading in a pure market. And what I mean by that, I'll explain, is that when we're just dealing with economic indicators and we're just dealing with earnings, that's what I call a pure market. Now, we are anything but a pure market right now because we've got noise coming out of China. You've got noise coming out of the Middle East with respect to oil, and we've got noise coming out of Washington. So it's anything but a pure market. We've got all kinds of things affecting that. But when you look at the metrics, National Retail Federation coming out with the fact that we're spending money, so our economy is 70% of our economy is based on consumer spending. So our economy is not being propped up; it's actually growing. When you see the unemployment report coming out, whereby we add 266,000 jobs, and I realize part of that was the GM thing, and unemployment down to 3.5. When you see all of these numbers, it makes you think, boy, all those recession talkers that we heard mid-year, and you and I talked about this, not so much. That recession in Europe that seems to be happening, we're holding off pretty here in the States. What's UBS's take on the long-term prospects, not of stocks, but as the economy goes right now?
Yeah, good question. So I love this time of year because economists love to put out their predictions for the next year. So they just published a couple this week. They're saying their expectation is that the bull market will endure over at least the next 12 months. Their expectations are modest. They're expecting earnings growth in 2020 of about 5.5% and have set a 2020 year-end target for the S&P of 3,200, which isn't too much higher than we are right now. So kind of modest expectations for the next year, but they're saying recession risks are low. So I think that's, a positive prediction.
So I want to talk about the payrolls report for a second because economists called the November payroll report a blowout, citing the higher than expected 266,000 jobs created in the month, and said it should probably silence the near-term recession Grinches, so to speak. And with what your report's coming out and talking about a bull market that's extending, or at least that's what they think. You see the Dow jumping on the report of the unemployment. You see the unemployment rate falling to match a 50-year low of 3.5%. The labor market continues to barrel forward, and even with any of the noise coming out of Washington, it just seems like the stock market is finally. I mean, you hear about investor fatigue. I think we're having Washington fatigue right now. Are you surprised at all, Christina, that the news of the impeachment inquiry and then the impeachment filings of this week didn't really affect the stock market at all? Because, look, I think people are just tired of it. I think investors aren't even paying attention to Washington anymore.
I think you're right. I think not only that. I mean, we have another presidential election right around the corner, and I think last time we spoke, you asked if we were positioning portfolios for that. We still don't have an idea who the Democratic front runner is, and even if there were changes that we could say we might expect based on someone's policy stance, we have to know who the nominee is first. So I think people are looking forward more to that than they are to what's going on with the impeachment trials. And like you said, I don't think that moved markets really at all this week.
So wait a second. So let me just clarify that. So if there is a candidate, and I don't need to name any names, let's just pick a platform. Let's say a candidate that is going to walk away from Medicare for all and really try to hone in on private insurance, then obviously that's a sector that you guys want to look at. Is that when you talk about a Democrat, the platforms, are you talking about what industries might be affected by their policy? Is that sort of the overarching thought when your analysts take a look at that?
Yeah, talking about things like that, and also, I mean, when Trump cut the tax rates for corporations, that was a huge boon for corporate profits. So, I mean, things like that can really move the markets. It just depends on the scale, and if it's a broader corporate America thing or something that's sector specific like healthcare.
Yeah, because it's interesting because obviously you look at open air indicators. In times like this to figure out, when people start whispering words about recession like they did at the end of the second quarter going into the third quarter of this year. And part of it was just, we've gone up for so long, it's got to come down at some point. But then you see things like transportation stocks going through the roof and energy stocks going through the roof and so on and so forth. You kind of have to pay attention to what's happening there. And then when I love how you brought the politics part of it into this thing. I never thought about that. But if you have a candidate, I don't care what side of the political fence is on, but if you have a candidate that wins that is pro-oil or anti-oil or pro-solar or pro-meta, you got to pay attention as an investor, right? Because whether whether the company is doing great now or not, you can if you get top heavy a little bit with respect to policy changes, suddenly you hear things like the word mandate and stuff like that. Christina, stay right there for a second. I'm going to keep you for a little bit longer today because I want to ask a question about some of our most familiar businesses that died in the last decade. The bull market in stocks the last decade hasn't been without its headline-grabbing downfalls of once formidable corporate titans. Let's talk about that a little bit with Christina before I let her go today. And the reason I want to talk about that is because I was driving past the corner of Convoy and Balboa the other day, and I realized, remember Dr. Leventhal used to have all the eye places around town? The Leventhal look? Leventhal's gone. Then I was driving 5 South past Mission Bay, and the Levitt sign is gone. Remember you love it with Levitt's? All these businesses that were a staple. And across from Levitt's was a Toys R Us sign. And Toys R Us sign was gone. Talk about some of the businesses that died in the last 10 years. I want to get Christina's take on what might survive. News Radio 600 KOGO. News Radio 600 KOGO, San Diego Business Weekend. I hope you're enjoying the weekend. December nights this weekend down at Balboa Park. Catch me every morning on the San Diego Morning News with Ted and LaDonna right here on News Radio 600 KOGO with all of your business news. Over there at KUSI, Good Morning San Diego, several mornings a week. And the Big Biz Show with Russ T. Nails. Russ and I are on the air every weeknight across the country on national television and radio on the Big Biz Show. If you want more information on that, just go to bigbizshow.com. You can follow me on all formats of social media at Sully Speaks or at Sully on the Air. And we're talking to Christina Gustin, my good friend with RKG Wealth Management, UBS Financial, trusted financial advisor. And I have referred several folks to her, and I want to make it very clear: UBS nor RKG Wealth Management sponsors this program. She just is generous with her time, and I use her resources and her wisdom because I believe in her. And in exchange for that, I hope you'll give her a call if you have any questions, because she is definitely the smartest person in the room when it comes to money and finance. So, Christina, thanks again for spending some more time with us this morning. So, as I mentioned before the break, the bull market in stocks of the last decade has been remarkable, but it hasn't been without some headline-grabbing downfalls of once formidable corporate titans. And I've talked to just a few in San Diego. The Leventhal, Dr. Leventhal, and everybody remembers Levitt's Furniture and such. And then, of course, Toys R Us is making a comeback, but Toys R Us was gone. Now, Christina, remember when Sears ruled retail in the 50s and the 60s and the 70s? I mean, Sears was a real thing. By 2018, the company was a shell of its former self and entered bankruptcy. And what about Blockbuster? And thanks to Netflix, Blockbuster went belly up in 2014. I gathered a list of companies that you might remember: Borders Books, Brookstone, Fresh and Easy, which was the grocery chain, Gymboree. I mentioned Blockbuster, Payless Shoe Source, Radio Shack, Sports Chalet. The Limited, isn't the Limited a clothing store, Christina?
Yes, it is.
Okay, it was, because it's not there. Sports Authority gone. Wet Seal gone. I think my kids or my daughters shopped there. But these are companies that died in the last decade, and these are companies that fairly some of us invested in and made money and were able to take advantage of earnings news and stuff like that. How does one? I mean, this is sad stuff, but by and large, all are tales of companies that didn't do enough to stay ahead of the competition or adapt to changing market dynamics. How do you is there even a way to put that stuff on the horizon and realize we better be careful because Amazon's coming up with better shipping, so I better keep an eye on FedEx or UPS? I mean, is there a way to even do that, or do you just have to go with the current earnings and basic fundamentals as you move along?
I know I talk a lot about our research here at UBS. It's one of the things that I think is the most important, resources that we have. They just published another report this week called The Decade of Transformation, looking ahead to 2020 in the coming decade. And talking about, all these casualties that you're talking about are casualties of transformation in the retail industry. And that's not the only industry that's being totally transformed. So we're looking very deeply not only at, the current state of all the different companies that we're investing in, what does their balance sheet look like and their economic health, but also how are they innovating and how are their industries changing so that they can keep up with the way that, the world is really changing. I mean, think about what the internet has done just for retail alone. It's completely revolutionized it.
Yeah, and a part of this thing is, I think what a real takeaway here is that, and this is just another reason that I want to bang the drum a bit for money managers like yourself and professionals, is because you can't just look at earnings, you can't just look at management changes, you can't just look at news, and you can't just look at technical analysis. You've got to also take a bigger picture and even look at, well, so this company doesn't have a lot of debt, it seems to be doing great, but it's still using cassette tapes versus digital or whatever, right? I mean, you have to look at technology as well, right? Or keeping up with the times.
You do, and a lot of companies have these big piles of cash right now, and that's really nice, but what are they doing with it? What kind of R&D are they doing? What types of innovation? What new business, silos of activity are they looking at? How are they moving forward? People think of Amazon as, the company that you use to order things online, and you see the trucks driving around. But a huge part of Amazon's business is Amazon Web Services, which I've heard a stat hosts something like 80 or 90% of websites in the world right now. So, you have all the ways that businesses can diversify themselves to keep moving forward and growing in a world that's changed. I mean, the speed at which things happen, too, you could argue Sears was kind of a slow-moving train wreck, but there are some that are going away like overnight. They're just vanishing because things are changing so quickly now.
Well, I have to ask a question, and we don't talk about individual stocks, but I want to talk about just a phenomenon that's happened, because I talked about this, I think I talked about it on Friday. Until now, the Humble Cooler, which I know you have to schlep around because your kids do a lot of sports and stuff like that, so you guys are stuck for the weekends a lot of the times with an Igloo or a Coleman. But the Humble Cooler has been a pretty functional product. By and large, a plastic or a styrofoam box that gets dragged around on your camping trips or your tailgate parties or your kids' sporting events or the beach or whatever. But there's a company called Yeti that I had heard of, but I didn't look at. I didn't know they were even publicly traded until literally just this very second that I looked it up, but it is a publicly traded company. I'm not going to tell you the symbol because it doesn't really matter. That's not what I'm talking about. What I'm talking about, the fact, though, is they've got this stainless steel cooler equipped with vacuum insulation for 50% better thermal retention. That sounds all great, doesn't it? Sounds like you need one, right? It's $800. Right. Suddenly, we have a luxury high-end cooler. Christina, I have to ask you, okay, and there are people investing in this stuff. By the way, their basic cooler starts at $250. I can't remember spending more than $13 on a cooler as a last-minute thing as I'm walking to the grocery store and hand me that styrofoam thing, and I leave it at the beach in the trash bin there. Is this a sign of the times with the economy, or are people truly? I mean, I started thinking to myself, I would pay $5 for a 9-volt battery or a little AAA battery if I knew I never had to buy another one again. Are people starting to be, less dollar foolish and more pound wise? Or is this just people are making too much money right now? Because it seems like a ridiculous amount of money to pay for something so banal.
So I'm not going to hate on any particular stock or brand. I think you've figured out I'm a deeply practical person, so I have a hard time paying $800 for something I can get for $50.
Would you pay $250? No, let me ask you this: they're more basic coolers at $250. Now, they say you can run over it; it's grizzly bear proof. But are you? I just what I'm thinking is this: is that I think this is short-lived personally. Not to say that their product isn't wonderful, because I'm sure it is. I'm sure it does everything that it says it can do. But I believe that the days of being able to pay $250 for an ice chest, or $800, which is really ridiculous, for an ice chest, I don't think you would have saw that 10 years. You would have seen that 10 years ago with the recession that we were going through. And I don't know how a company, and forget the cooler side, what about people that are selling $1,200 shoes, or people that are selling cell phones for $1,500? That cannot survive forever, can it?
When we're looking for investments for our investors, we want long-term sustainable businesses that are well diversified. Does that answer your question?
Yeah, okay, perfect. Christina, thank you so much. Christina Gustin, UBS Financial. Christina Gustin for president. I love her. UBS Financial, RKG Wealth Management. Well, from the $800 cooler, let's move over to the topic of homelessness, because my good friend Phillip Molnar, who is a writer. I think he should be the editor of the entire business section of the San Diego Union Tribune. He's one of the smartest guys I know. He puts together a thing called the Econometer, and he talks to business leaders about one central question, usually every time the Econometer comes out. This week's question was, is homelessness caused more by drug addiction or by housing costs? Because leaders in many of America's largest cities have struggled with the growth in the homeless problem, and Mayor Faulkner has done a credible job of trying to battle that. But Phil, thanks for taking some time out of your weekend to do this. But boy, I loved your question this week, because boy, talk about picking a fight. You just picked a big fight here, because there's two sides of this coin, isn't there?
Yeah, I know. Well, thank you so much for having me. And I kind of stole the idea, or was inspired. So I was watching 60 Minutes last Sunday, and Anderson Cooper had a really good special on homelessness in Seattle, which has a ton of the same issues as we have in San Diego County. And I was kind of surprised by the report, because it covered all the normal things like increase in homelessness, tents, and whatnot. But then it suddenly sort of shifted into talking to all the city leaders and what their thoughts were. And it came down to this kind of fight or argument that some people were saying, well, this issue is not housing costs. Sure, our housing costs are expensive. The problem is mental illness and drug addiction. And the other half was just saying, well, that's all fine and good, but there's always been mental health issues and drug addiction. The problem right now we have is housing costs. So it was just this kind of simplified look at it, and it's been a while since I kind of narrowed it down that way. And so then I asked our panel this week, our Econometer panel, what they thought, and I was really surprised, because it was mixed answers.
What's interesting is that, and it was a fantastic study, because in doing talk radio in this town myself for 25 years, I can tell you these are two things that we always are talking about in the city of San Diego. And homelessness and housing costs, I don't think anyone's ever brought the intersection of the two together as you have. And I realize that the 60 Minutes special was on it, but you really ask a question that is really nascent to San Diego. Because if you look at the same issues in Seattle that San Diego is facing, it comes down to a tale of two woes, and I think you nailed it. Phillip, stay right there for a second. I'm going to keep you, because I want to talk about what I think the solution is for both things. And a business side of thing here that we can talk about it specifically is the housing issue, which Phillip handles very nicely over there at the Union Tribune. So let's get back to Phillip in 1 second. It's San Diego Business Weekend. I'm Sully. It's News Radio 600 KOGO. News Radio 600 KOGO, San Diego Business Weekend. I'm Sully. Do me a favor, you can follow me on all forms of social media at Sully Speaks or at Sully on the Air. Go to bigbizshow.com or join me here every morning with Ted and LaDonna on the San Diego Morning News. On News Radio 600 KOGO. Also catch me over at KUSI most mornings on Good Morning San Diego, and right here every weekend on San Diego Business Weekend. Phil Molnar, San Diego Union Tribune, so generous with his time. And I'll tell you, one of the smartest guys in San Diego regarding business, and the Econometer this week in the San Diego Union Tribune asked a very, very simple question, yet complex to answer. Is homelessness caused more by drug addiction or housing costs? Let's save the business side of this thing, the housing cost side, for last. But Phillip, what was the basic answer when you went to your panel of business leaders and education leaders in the city about what is driving the homelessness?
Yeah, so I was actually surprised that the majority of people said yes, that mental illness and drug addiction was more of a reason for homelessness than housing costs. It was about 7-5 in the answers. And a lot of it had to do with this sort of belief, and also studies that looked at mental health reasons or drug addiction being more of a reason for long-term homelessness and a reason for it. As one of the people put, Phil Blair from Manpower, he said that no human being that is in control of his or her senses prefers living on the streets for years at a time over a home or an apartment of their own. And one of the reasons the answers sort of shocked me were there's been so many studies over the last 4 years. I'm probably guilty of living in a bubble here, but a lot of the studies, like UCLA came out with a good one, Zillow partnered with the LA Times for another one, which all kind of showed that a rise in housing costs really strongly correlates with a rise in homelessness. And it's sometimes in some of these studies will show as a bigger indicator of coming homelessness in a city, which would be an increase in rent prices as opposed to any other factor. So I was sort of surprised because I've just been in this like housing bubble. But when you look at it, there's the consensus basically is that there's no consensus on this issue. And I think that's a big problem we have in San Diego, where no one can really say, oh, well, a lot of the answers were saying we need more mental health money going towards these factors. And a part of the problem is these people don't want to get sober. They want to stay in their disease and that sort of thing, as opposed to the housing factor.
Well, what's interesting is David Eli with San Diego State University, in answering your question on the Econometer, gives some pretty interesting facts, and that California has a homelessness rate of 33 people per 10,000, which is higher. It's double than the national average. That tells us something here. Is that just? I can't believe that's just weather. I believe it's the housing costs. In my opinion, I think the housing costs are responsible more than anything. Now, look, I'm born and raised in this town, and that doesn't make me, all-knowing, but I can tell you I've seen a lot of different changes to the town, and I will tell you, with California's environmental standards for building, making it so difficult to build anywhere in California, and specifically in San Diego, I've always held, Phillip, and I could be wrong here because you're more of a housing expert than I am, I think the cure to low-income housing and homelessness housing, like you would see in the Housing First model, would be make it easier to build. Less impediments to building, because more housing cures all housing. Does it not, or is that too altruistic to grasp here in a city the size of San Diego?
Well, no, I don't think so. At least as far as being downtown goes, a lot of because we have like a downtown plan that we don't really have to follow like the California Environmental Quality Act. Like, not every building needs to go through a strict environmental process. So we've already gotten that out of the way. But any other part of the city, or the county, I should say, a lot of projects are held up by the California Environmental Quality Act, which sounds so great when it first came out, but a lot of the criticism of it is it's basically used as a way to stop projects from taking place in more affluent neighborhoods where more housing could go in. So it's sort of this knee-jerk thing that is used by a lot of people, and some might argue, it's a lot of times it's in white neighborhoods, especially where this law is used a lot to stop housing. So there's even some calls I've seen from a little more aggressive proponents of it. Will say things like, that it's a racist. It can be used in that sort of way for housing policy. So it's kind of it's a tough thing with the environmental laws that often will play a factor in this. But one of the things, too, I've seen, sometimes I like to watch, like, YouTube videos or read stories about, like, modular housing or some
tiny
crazy
homes,
housing solutions they've come up to in Singapore, where it's just they're building homes super fast and, it's taking care of this need for housing, whereas at the same time, you just never see that in San Diego.
Listen, I'm going to put my talk radio hat. By the way, Phillip Molnar joins us here from the San Diego Union Tribune. Thanks again, Phillip, for swinging by here. And if I ever have to take a day off, I'd love you to come host this show for us, because I think the city would be smarter for it if you came in and helped out. But here's my issue.
Oh, thank you.
I think that we need to leverage opportunities in the existing housing market while concurrently acquiring and building housing and converting all transitional housing to permanent housing, first of all. I think we got to get rid of the busy feel-good initiatives and come up with policy like what the mayor came up with a few years ago, Housing San Diego. It's all about housing. We need to build thousands of homes, some government subsidized, but mostly market-based, because tell me if I'm wrong here. Isn't there a huge market for rents at $500, $600, $700 a month? And if so, why can't we meet it? Don't we need much cheaper, smaller options? Because there is a gulf between the cheapest, minimally viable home and homelessness. And stop requiring parking. We need cheaper, smaller options because of this rent of $500 to $600 to $700. We got to be able to meet that, don't we?
Yeah, it's kind of surprising when you look at a lot of the studies about housing. So here in San Diego, the most in-demand apartment you can have is a studio that's under $1,200. That has like a vacancy rate of around 1%, 2%. And that basically means just one person walks out of the apartment and then like a day passes and another person walks in.
Yeah.
And you could see it too. Like there was I think it was JLL construction company recently sent me a study, which I didn't end up writing about, but I'm glad I did because now I can talk about it. But basically it was looking at rents and demand in San Diego, and there's very little demand overall for Class A or really high-end apartments that cost a lot per rent.
Yeah, because there's a ton. Look at UTC's got a $15,000 a month penthouse apartment for rent right across from UTC, right? I mean, we've got plenty of for the A-listers, right? I mean, I don't. But they're vacant.
Right. No, exactly. And the problem was in that study that looked at was like the Class C, which is considered like the low-end, cheaper rents. The demand was so extremely high on that end that even this report was mentioning there's probably a good shot for investors to start buying up these properties because there is such a huge demand for it that even if you're not even necessarily jacking up the rent, maybe just incrementally doing it, the demand is high enough that there's like actually an investment opportunity there for these Class C rentals, especially in areas outside of downtown.
I have to ask you, do you remember the article you wrote? I know you do. A couple weeks ago, it was probably a month ago, about that shed in the backyard.
Oh, yeah.
I forget. What part was that? University Heights or something? I can't remember where it was, but
it was right on the border of. It was in North Park, but it was right on the border with University Heights. So
how much?
What neighborhood you were in?
Recap that again. What was that? And what my question was going to be: did it ever rent out? And what was the story again? Were they asking for like a 400 square foot shed?
Yeah, it was like around 200 square feet, I think.
Oh, my gosh.
And it was this very small apartment that had actually been rented for decades behind a house. It wasn't like it looked like it. It looked like someone had put up a shed and was just renting it, but actually someone had been renting it for a long time. So what had happened was the owner lived in, I believe, Nevada, and had like a management company doing it and put it out there, okay, $1,100 a month to rent this shed-looking structure. And what would happen from there is, it was just out on the internet for a couple of days, and then someone put it on Reddit, the social media website,
That's right.
And people were making all these funny jokes about, like, oh, my God, they're renting a shed for $1,100. And then I decided, I waited a couple of days, and I was like, oh, yeah, I'll write a story about this because it's a talk or whatever. And, I got to talk to the property management company, and they said this is actually a good deal. You can't find this kind of cheap rent anywhere, and it's probably going to rent out soon. And, I talked to the owner who said, what are you talking about? What do you want us to do? Like, it's a great deal, same thing. And the story just completely blew up. It was on the homepage.
I know you
of,
got
CNN.com.
national on that. I saw you on national
Fox
news
everywhere.
1,050. I think they were asking for the $200. Did it ever get rented? You ever find out if it ever got rented out again? Was it?
I checked about a month ago, and it still hadn't rented out. So I haven't checked in a while. I would not doubt that it did.
Yeah.
Because I'll tell you what, over the last 3 or 4 years, I always do all these stories that are like, oh my God, you would not believe this place. They want $250,000 for a house that's falling apart, and it's like 300 square feet. All of them always end up selling.
Yeah, you know, it's funny.
It's just ridiculous.
It's amazing. And by the way, this thing does. In fact, we tape this show from the Jump Television Studios here in San Diego. So when you hear us on the radio live on the weekend, there's also a taped TV version that we put up later on. So KOGO.com, keyword Sully. You can look at that article because the guys just put it up there. That Phillip wrote. Phil, thank you so much, bud. Have a great weekend, the rest of your weekend, and
yes, thank you for having me.
Can't wait to hear from you again. But check out most of Phil's articles are surrounding the real estate and business world over there in the Union Tribune. So check that out. All right, coming up. You know, my favorite organization in San Diego is the Challenge Athletes Foundation. I got one of my favorite people in Laura Wolf-Stein. She's coming in studio here. We're going to talk about Giving Tuesday, about a special event that's coming up in the next week or so. News Radio 600 KOGO, San Diego Business Weekend. Sully here. Great to have you along. Thanks again to Phil Molnar from the San Diego Union Tribune, as well as Christina Gustin from UBS Financial. But I would be remiss spending an entire show without mentioning Challenge Athletes Foundation. And if you are listening to me anywhere from San Diego to Santa Barbara, all the way out to Yuma, you also know that you can watch San Diego Business Weekend by going to KOGO.com, keyword Sully. And on the set, we have a poster of Challenge Athletes Foundation, one of the $1 million challenges that I participated in. And of course, thanks to you guys. I remember just 3 years ago here in this studio that we had one of the KOGO listeners who runs the foundation bring in a $10,000 check, and we brought Bill Walton in the studio, and you donated money. And we're constantly sort of promoting Challenge Athletes Foundation because it was born and raised here in San Diego, just like I was. I got the mayor of San Diego involved, got the chief of police involved, and want to get you involved. And as a result of that, I've made some really good lifelong friends. And I will tell you, at one point in my life, I said to myself, every single thing I do in this town, other than media, but all the business interests I have, all of the friends I have, came from CAF in the last 10 years. And one such friend, which I consider not just a friend, but I also consider a coworker, and Laura Wolf-Stein joins us here in studio. And Laura, I have to tell you, because of the fact that I always get intimidated because you're kind of from the business. You're kind of from the media advertising marketing business. So it's not like interviewing some guy who's, looking around doe-eyed that they're in a radio studio. Like, you know what you're doing around here. You find your way well around the television studio. How are you? Nice to see you.
I'm doing great. I'm thrilled to be here.
I am excited to have, anytime you guys come on the air with us, and as you know, I love to have your athletes on, but it's great to be able to see how the sausage is made a little bit. And of course, as you mentioned to me before the program, December is the season of giving. You guys have a theme this year. And what is that theme for CAF?
We do. Our holiday campaign theme is all about giving more than sport. So when you give to the Challenge Athletes Foundation, you are giving community, you're giving self-confidence, you're giving friendship, you're giving health. So much of what we're doing in the month of December is celebrating that. We have a ton planned for our holiday giving campaign.
I got to tell you, for people that, and I get people stop me all the time, either from KUSI or KOGO and even the national show, saying, I hear you talk about Challenge Athletes Foundation. What is it exactly? Because I know it has something to do with you riding the bicycle down the coast, but then we also have something to do with this big triathlon thing, and I also have these adaptive surfing clinics. What is it? In a word, we're basically helping folks that have physical challenges to participate in sports. I mean, isn't that as simple as that? Because an insurance company, if you were to lose a limb, regardless if it's from a motorcycle accident or from fighting for this country, insurance will pay for a walking leg or a wheelchair or something like that, but it doesn't pay for any adaptive sports equipment, right? Isn't that where you guys fill the gap?
That's right. I mean, we exist to serve individuals with physical challenges through sport, and that's where all the funding goes. So we are this incredibly unique, special community of fundraisers and supporters, a lot like yourself, Sully, and also athletes who come to us not just for funding, but what they really come to us for is community. And we've been all about celebrating the effort and the accomplishments of challenged athletes for over 26 years.
So this year, it's Give More Than Sport, and as a result of that, you have a couple of things planned. But boy, this last week, Giving Tuesday was a big, big day for you. Talk about that.
It was a huge day. So Giving Tuesday, each and every year, with the growth of social media, all the momentum around content and Facebook and Instagram and Twitter. I mean, so many charities are getting involved in this National Day of Giving is really what it's become. And this year, we had a campaign called Give 20, Do 20, Give 20.
Right.
And we encouraged our social media audience, our challenge athletes, our supporters to do something athletic 20 times. You could run 20 minutes, you could cycle 20 miles, you could do whatever. And there you see Jamie Marseille, who's one of our athletes.
So for our radio audience, if you go to the website, go to the website KOGO.com, keyword Sully, you'll see this video of the show here. But what we're showing you is the YouTube video you put out. And this is the campaign that you talked about.
Oh, we had 20 pull-ups. We had 20.
These are like,
what are those?
These
Like
are
arm sit-ups, arm planks.
the heck
We had
they're
20
doing.
jump ropes. We had 20 wheelchair
20
pull-ups.
times 100 meters for Team CAF.
Yeah.
And,
So we had over 225 individual social media posts.
how did it go viral? Did you
reached
guys
an-
promote it or just went out there and
There's
suddenly just
there's a
went?
little bit of engineering going on in the
Right.
background to make sure that all of our big athletes and our big influencers are out there.
Right.
But really, people start to see it and then they want to do it. Our team did a 20-minute walk around our office.
Uh-huh.
We had people doing 20 pull-ups. I mean, everything. We had cycling exercise groups like this one that you're seeing right now online. They did 20 minutes dedicated to the Challenge Athletes Foundation.
Right.
So people had a ton of fun. The great thing is that not only did we create community, did all these posts go viral, we reached 1 million people on social media alone.
What?
We raised $60,000 in a single day.
$60,000 on the Giving
Average
Tuesday.
donation amount $25. So this is a chance for all of those smaller donors to come out, and a lot of new time donors came out and got to know the mission through all this cool content, and they gave, and now they're part of our community.
This is, the impact that, by the way, you can go to challengedathletes.org. 20 million people reached, $112 million raised so far, 103 sports supported, and your impact goes 50 states and now international as well, into 45 countries or something like that last time I checked. And I think you guys have put out anywhere from 25 to 30,000 grants so far. In a given year, this takes constant giving to help out. And this time of the year, obviously, we want to support that. And there's not only events that people get involved in, but they can actually just donate. And put it this way, as I said before, this is important. Most insurance companies do not cover adaptive sports equipment, and many individuals with physical challenges simply can't afford it. And that's really what it comes down to. If you see these running legs, or what they're called as blades, as many of you see them, that's $30,000 roughly for a pair of those prosthetic, for a bilateral amputee. A wheelchair to play basketball or play tennis or something can go upwards of $6,000 for something like that. And then, of course, a single running prosthetic is anywhere $12,000 to $15,000. This is what we're talking about here, though. You're funding equipment, and it's not just for adults either. I think that's the piece that you have to understand, is that and this is not just high performance stuff. It's not just Paralympic thing. Talk a little bit about that.
Yeah, I mean, it's age 4 to 77 was the kind of age range of our grant recipients in 2019. We have over 4,000 applications already in for our 2020 grant distribution. So we are raising money to make sure that all of those eligible applicants get the funding they need, whether it's equipment or travel expenses or competition expenses to go do what they love. And if it's a dad who wants to go join the family bike ride, we want to support a hand cycle. If it's a 6-year-old who's never run, we want to make sure that 6-year-old is learning to run, because you've got to have exposure and opportunity at a young age so that you can get involved in sport. And all of us know the importance of health and wellness and sports in a full life, and we want to make sure that there's no economic barrier for those that want to participate.
I love the Do 20, Give 20 idea here. And if you go on our website KOGO.com, keyword Sully, you'll be able to see the video of people of all. In fact, that's our good buddy that runs Montana Mex right there.
Yeah, there's Eduardo
That's
Garcia.
Eduardo Garcia.
Yeah,
who, by the way, was a survived electrocution, basically. Visually impaired, limb loss differences, cerebral palsy, military first responders, cancer survivors, spinal cord injuries. That's some of the examples of the common disabilities that CAF supports. Once again, challengedathletes.org. I want to take some time and talk about a very special event coming up this Tuesday, December 10th. In the morning over at is it at the CAF building?
It's at our headquarters.
Talk about it.
Yeah, it's at 10 a.m. It's with one of our partners, Covered California. The executive director of Covered California will be there, Peter Lee. Their team is in their open enrollment period right now, and they are trying to raise awareness, get enthusiasm, get media interest, so that Californians who need funding for health coverage know that they can go to Covered California and join in open enrollment. So the event is open to the community. It's at 10 a.m. The event is going to be an inclusive boot camp. It's 1 hour. It is for all abilities, so do not be intimidated by the term boot camp. We have Scout Bassett, who is a Challenge Athletes Foundation ambassador.
On the cover of ESPN magazine and Nike commercials, a Super Bowl commercial.
Totally. She's a Paralympian heading to Tokyo 2020. She's a sprinter. She's a long jumper. She has an incredible story. She'll be sharing it at the event. If you've never met Scout or had a chance to spend time with her, you'll actually get a chance to sweat with her, which is what's so cool. She'll be joining Bettina Gozo.
She's a Nike master trainer,
Bettina
right?
is a Nike master trainer and a huge supporter of the Challenge Athletes Foundation. She's been doing a series of inclusive workouts with us this past year, one in Chicago, one in San Francisco, and now we'll be doing one at our building. Again, all to raise awareness for what Covered California is trying to do with this string of open enrollment events. Again, raising awareness, raising enthusiasm for affordable health care. And we care about access to sports and health, and so does Covered California. That's
also,
why we're partnering with them.
My buddy Travis Ricks, who's been on this program a number of times. He's an amputee. He's the Athlete and Associate Director of Programs for Challenge Athletes Foundation. I will be out there, although with a brand new replaced knee. I'm not going to be working out with you, but I'll be out there. I'll try to get a bullhorn and try to yell and scream as loud as I can. You got 100 athletes from the community participating in this mass boot camp. I'll bring Rusty Nails with me. I think little Tommy from KOSI has agreed to come with me out there. So if you come out there and come say hi to us, and I will do everything I can to depending on schedules, to either try to get former Police Chief Shelley Zimmerman and Mayor Kevin Faulkner. It just depends on their schedule. I know I will tell you, they rode with me 700 miles in 7 days down the coast of California this year. So they have spent a ton of their personal time, talent, and treasure on supporting CAF, and we'll get them out there. But if you want to come down, it's open to everybody this Tuesday, December 10th. And if you haven't seen the Challenge Athletes Foundation building, the Jeff Jacobs Challenge Athletes Foundation headquarters, I call it a destination. I've brought hundreds of people there just to see it. And it tells the story of CAF. Plus, it lets you touch and feel and see stuff. And
it's such a special environment. You understand who we are and what we do the minute you walk in that building. And it's a really unique opportunity to be in our building, but also to work out with our Challenge athletes.
Laura, you need to be running for president, as far as I'm concerned. And I will tell you, the more people you can bring in here, our studios are always open for you. Look out for Laura on KUSI and some other news stations talking about this Tuesday, December 10th, 10 a.m. to 11 a.m. at the Challenge Athletes Foundation. Send me an email. I'll get you over there. We'll post it up on KOGO.com, keyword Sully. Thanks so much. I appreciate you coming in. All right, that does it for us. Christina is our director. Curtis Maddox is our assistant director. Me and producer Lady Mary back at the studios helps us out there. And, of course, you can find me every morning at San Diego Morning News on News Radio 600 KOGO and Good Morning San Diego on KUSI. And, of course, nationwide, coast to coast, 110 million broadcast homes. The Big Biz Show with Rusty Nails and myself, bigbizshow.com. It's San Diego Business Weekend, News Radio 600 KOGO. Have a great weekend.